Welcome to LevFin Insights podcast series, Levered Lines. I'm Luke Miller, Global Editor-in-Chief at LevFin Insights. I invite you to listen to our series of podcasts where we interview key market participants as we look across the main themes impacting the leveraged finance markets. And with that, over to the team.
Welcome to LevFin Insights Levered Lines podcast. I'm Steve Miller, a member of the CreditSights team here at Fitch Solutions. Today we're talking to Sean Griffin, CEO of the LSTA. Before joining the LSTA in 2024, Sean was an accomplished member of JP Morgan's Global Markets Division. Most recently, he co-headed the bank's global CLO business. In addition, Sean has been a great friend and partner to us here at Fitch. Sean, thanks for joining us today.
Thank you for having me.
Let's start with a basic table setter. Can you give us an update on the LSTA, what the organization strives to do, and the goals that you have?
Sure thing. So LSTA is the trade association that's responsible for the U.S. corporate lending market. That includes the broadly syndicated space, private corporate credit, as well as related markets like the CLO market. We've been at this now for 31 years. We had our 30th anniversary last year, which is a tremendous amount of fun. And we really look to we have one main mission, which is the advancement of the corporate lending market. We like to see increase in growth as well as efficiency in the corporate lending market. And we accomplish that by really across four main disciplines. That's leadership, advocacy, education, and data and insights.
Interesting. So before we get into the meat of the interview, all of us who have been in the loan market a long time suffered a grave loss when Bridget March died earlier this year. I wonder if you could talk about her legacy in the space.
Yeah, I appreciate you bringing it up. And it was something that was just incredibly challenging for us as an organization and a big loss for the market overall. Bridget had been part of LSTA for over 2 decades, and she was our general counsel. She was well known across the market, well respected. While it was a very challenging time for us, it was made easier by all the outreach of kindness and support from folks across the industry. So I certainly thank everyone for that, and everyone on the team was very, very thankful for all the nice messages that came through. Bridget was just such a driving factor of so much of what LSTA did. She was big on collaboration, big on education. A lot of the really neat things that we do throughout the course of the year were spearheaded by Bridget years ago, such as our LSTA summer series, which so many folks in the industry really take advantage of throughout the course of the summer. So there's many more than that. The collaborations that we've done with other trade associations like LMA, our sibling organization across the pond. Right. And I was over in London last week with Scott and the team, and we had a little bit of remembrance for Bridget as well. But again, I appreciate you asking. And it was definitely a tough time for all, but we are managing through. And I think her memory and her legacy will live on with certainly us at LSTA and as well as across the industry.
For sure. And I know that my colleagues like Jessica Reese on the Covenant Review team had tremendous dealings with Bridget and a lot of great collaboration. So a lot of sadness around the organization. So thanks for that and the tribute there. So let's get back to the LSTA. You mentioned the four different areas you pursue. Why don't we drill down on each in turn? And let's start with your comment on leadership and advocacy.
So leadership and advocacy, two separate things. So maybe we'll start with the leadership side of things. And that focuses on looking at the market, thinking about what sort of governance and guidance the market needs. Mm-hmm. The market does have a lot of self-governance, given that it is loans. And we work with the industry, both buy side and sell side, to help set up processes and procedure to make the market more efficient and more fair for all the participants. So, and actually, when I think back to the founding of LSTA, well before my time, it was really to help solve the issue of trading loans in the secondary market. Coming out of the 80s into the 90s, loan syndication, the loan product was largely focused on the bank side of things. And we realized at that time that institutional investors wanted to become lenders in the corporate space as well. And the ability to have loans change hands more easily and readily became increasingly important. So back in 1995, so 31 years ago at this point, LSTA, its predecessor organization, was founded with the purpose on streamlining trading activity. And we've built up from there to primary market procedures, still focused a whole lot on the secondary side of things, and really addressing anything else that comes up from a market operational perspective as it's needed.
Unfortunately, I'm not too young to remember those early days of the LSTA, and it goes back a long way. One of the things you guys have done such a brilliant job is around education conferences. I wonder if you can talk about what you're doing there and maybe what the future holds for that.
Sure thing. Education is a huge thing. Again, our dearly beloved colleague Bridget was a big proponent of education, as are we. We think it's one of the best ways that we can reach members, especially the next generation of leaders that are in analyst and associate roles right now at our various member firms. So we put a lot of time and effort, energy into education, and in fact, over the past 12 months, we've been rethinking how we want to approach that to really broaden and deepen our touch points with all members on the educational front. So expect to see more from us there in the future. Part of that is what we do on the conference side of things. Yes. We've got a handful of homegrown conferences. We have, in no particular order, but I'll try and do in chronological. We have our operations conference coming up in Philadelphia in early May. Our annual conference each year, generally in October, and then we do an annual event in Tokyo for the investor base over there. And those are all just LSTA only conferences. We partner with some other organizations as well. I mentioned LMA. Yes. We partner them on an LSTA LMA conference, really a pair of conferences, one in London and one in New York. The New York one comes up in the middle part of May. We partner with CRC, so the Creditors' Rights Coalition.
Oh, right. Mm-hmm.
We did that event earlier this year. Yep. You were a guest there.
Thank you for that.
Inviting
me. Yep.
That was a lot of fun. That was really a tremendous event. A tremendous amount of fun on a Friday, and super well attended for a Friday too. And then we work with a third-party conference organizer in Deal Catalyst on a New York CLO event, which is coming up end of April. A private credit event in Nashville coming up mid-April.
Oh, exciting.
And last year we kicked off a couple of events in the Middle East, which we're hopeful to get back there again, though we want to make sure things calm down a bit before doing so.
Of course. And just a quick follow-up there. I mean, we've gone from the analog age when I first started to the digital age. Have you found opportunities to make the conferences more digital? Do you feel like the audience is starting to trend in that direction? Or you still feel like a lot of people come to the events?
I think a lot of people still come to the events. I think that certainly some virtual aspect is useful and helpful, though I do think the in-person networking is a critical part of what those events bring. And you think of something like a CLO event, a real driver for both issuer and investor participation is those face-to-face meetings with one another. So we want to make sure that we are continuing to encourage that, but also making the events as interactive as possible and recognizing that the attention mindset for the market is changing. It used to be you could sit for 60 minutes and listen to a panel. Some of us still can do that, but a lot of us have, there's a newer generation that's grown up on, 1 minute, 3 minute, 5 minute segments. So how are we thinking about that? And maybe that's not necessarily in the conference context, but certainly in other forms of content and education, thinking about like delivering things in the right way and the right sort of bites that are very easily digestible.
That's a great point. I love coming to your annual conference every year. And I always find myself thinking, who are all these young people that are in the room? But then I see some people my generation and around it, and I always love catching up. So it's a tremendous service you do for the market. So we talked a little bit about data and information, the work that I guess Ted and the team do. I wonder if you could elaborate on that.
Yeah. So data, as we're all becoming increasingly aware, is just it's so incredibly valuable, and I don't think maybe 20 years ago people put enough weight on what data could really do for you.
Yes.
And it's very easy to think about things like, oh, well, what's the bid ask on loans? What's the average trading volumes? Those are very simple, and you can extract a lot from that. But there's like second and third level layers of data that you can look at that we as an organization, as a result of our membership, and we've got over 600 members, roughly 100 sell side and a little over 200 buy side members. Lots of great information there that many of them are willing to share with us, where we can create some pretty useful insights. It allows us to dig deeper than just things like trading volumes, and kind of like bid-ask spreads, and look to like the next level information, which can help drive better insights on the market. And it's not just market data; it's things like when you think about. When we think about, look at ourselves in the mirror and say, well, how are folks interacting with us? What can we utilize from a data aspect to create better, more interesting content topics for our membership.
Makes a lot of sense. Then finally, obviously, private credit has been the growth engine of a lot of leverage finance over the last 5-10 years. There's been some stress around the space. The LSTA has been doing a lot around private credit. It'd be interesting, I think, for me and people listening to this to get an update on that piece of it.
Sure thing. So we formally launched our private credit initiative just over 2 years ago at this point, right around the time that I started, that was being kicked off. My first board meeting, I think, was the official launch of the initiative. So it was a great time to get on board. But when you think about private credit, and its origins were in the direct lending and middle market space. That's been around as long as syndicated lending's been around. So it's not its origins aren't necessarily new. It's just it's receiving new focus. Now, with that new focus, we've also seen increased investor demand, increased growth and expansion of the product. So it's grown beyond just the traditional direct lending market. Though when I think about our membership and what we're focused on, that's largely where we're focused as of today. Mm-hmm. We do the same thing for the private credit space that we've done for the syndicated space, which is work with our subject matter experts that are on staff and our membership to provide the education and the advocacy as it's needed across the market. And I think, quite honestly, within private credit, there's plenty of room for education.
Yes.
When people think about the market, they say, well, it's one of the critiques is it's less transparent. And my view is different than that. My view is if I'm a lender in a transaction, I actually have a lot more transparency than I do if I was dealing with like a public company. Mm-hmm. So I have a benefit there. However, the nature of those transactions makes it such that it's harder to aggregate information, which is where a trade association, LSTA, can really add value because we can work with membership to provide that deeper level of insight, that aggregated information that's otherwise challenging to get from the market and deliver to stakeholders out there, including like policymakers in Washington, D.C.
That's such a good point. I've been thinking a lot about this period in private credit, direct lending, whatever we want to call it, relative to the experience I've had over the decades in syndicated lending. And it seemed to me like with syndicated lending, the early 2000s recession default spike really brought into the market a lot of the things that we take for granted now: index benchmarks, ratings on a wide scale, all the transparency. And I wonder if you think that the recent stress around private credit will have a similar impact where we'll bring a catalyst for that sort of transparency.
So it's a good question. I don't think it's the recent stress that will drive that. I think it's just the expansion of the asset class. So as recently, Department of Labor came out with their proposal for including private assets in defined contribution plans. I think that will be more of a catalyst for some increased transparency, some increased thoughtfulness around benchmarking and market metrics than any sort of company-specific news in the press.
Interesting. So one thing I failed to ask you about that I had on the list was settlement, right? That's obviously been a bit of focus of the LSTA for a long time. I wonder if you give us an update on that piece.
It's been a focus of the market for years and years.
For sure, yes.
And what's been great about the market has been the markets continue to grow. In fact, within the past month or so, if you do a 12-month look back, the market finally eclipsed $1 trillion in trading volumes.
Wow.
Yes.
Okay. Yeah.
So that, and you combine that with a very robust primary loan market from the past couple of years. Let's call it like 1.2 to 1.4 trillion of issuance activity. Those are incredibly large numbers. So the business side, the front office side of the market continues to grow and wants to be engaged and do more primary, do more secondary trading activity, which is great and incredibly important. And certainly from the perspective of providing capital to corporate America and all the borrowers out there. I think the operational side has, quite honestly, lagged behind a little bit. It's been difficult to keep up with the volume.
Yes.
And it's in part because, and I've got a couple of sheets of paper here in front of me, because there's a lot in the loan market that still feels like it's sitting on sheets of paper.
Yeah, that's fair.
As opposed to being as fully digitized as it can be. So we are huge proponents of digitizing the asset class. And that starts with a very solid data foundation. Mm-hmm. If you have a solid data foundation, you can build all these other neat things upon that to help facilitate better settlement. And the market is, I think at this point in time, there is real momentum in the market to want to affect change and make the market even more efficient than what it has been. And part of that is the advancement of technology. Part of that is the improvement in data. And part of that is the next generation of leaders that are in place who come from backgrounds that are not just loan backgrounds.
Right.
We've got folks on our board now, for example, who used to run high yield businesses.
Yeah.
Which it's a phenomenal perspective to have because they come from a market that worked differently, related market, but that works differently. And you can take some of that over to loans. But we want to make sure, though, in anything that we're doing, that loans don't lose their identity. Like loans are loans and loans are loans for a reason.
That's fair.
And there's flexibility that the borrowers like, the flexibility that the lenders like. We want to make sure that that persists, but we want to make sure that we're taking the right steps forward to take loans into the future.
Interesting. So we talked a lot about what the LSTA has been doing and is doing now. Maybe we can think a little bit ahead. And what's your perspective if you think about the next 3 years, 5 years, given current market themes, how the LSTA will evolve?
Yeah, another great question. You're full of great questions today. This is awesome. I love it.
It's easy to ask. Yeah.
There you go. There you go. So I think in a couple of different ways. One is going to be improving on just the member engagement. It's something I mentioned earlier on. We want to make sure that we are doing that in a more efficient and a more effective manner.
Mm-hmm.
I think we've been quite good at what we've been doing, but I think that the way that people want to engage with us has evolved over time. We want to make sure we are keeping up with the times. That's one way. I think related to that is how we're positioning the loan market for the future and what that means, and making sure that we're open to new ideas that are out there. I mentioned this data foundation, which is critical to the ongoing success of the market. There's questions around digitization, tokenization. How do you think about settlement systems and how all these things kind of function together, and interconnectivity across all the different vendors, service providers that exist out there, as well as the buy side and the sell side. How can you become a more integrated and efficient market? What we want to promote at LSTA is, one, we don't want to go anywhere that our membership doesn't want us to go. So we'll always take direction from membership first and foremost, but we want to make sure that as new technologies are introduced, as other markets advance, that the loan market is positioned to make a choice, right? We have an option that we can choose to exercise or not. The choice is not made for us. If the choice is made for us because we're incapable of doing something, then I think we lose out as an asset class. We want to make sure we're ready for all the possibilities, and then we can pick and choose from the menu of options of things that best suit us as an asset class.
It makes a lot of sense. So let's switch gears. And you mentioned before about the conference you do with the Credit Coalition, which I enjoyed going to at NYU. It was a great conference. Ed Altman, some great people around the room. The panel you invited me to moderate was on artificial intelligence, which I know very little about, but I did my research and did some AI searching and came up with the questions that I could put to Kelly and Satrin. And so I put the question to you, like, how are you guys using at the LSTA AI to maybe turbocharge what you're doing?
Yep. So it's something that I've been pressing staff on. Let's make sure that we're utilizing the tools appropriately that are out there. And that starts with not just blindly using something, like understand what it is, understanding what it's not, and understanding what risks are associated with that and what sort of governance you have in place. So it's a baby steps. Let's be thoughtful about things, but anything that can make your life easier and more efficient. Like if I want to source data that I know is out there publicly, I can go myself, key it in and look for it, or I can put in a Chat GPT or Claude, please pull this together for me and put it and format it nicely for me. So that just little ways to save an hour or two each day, kind of like collating data, searching for things that would otherwise have taken a lot more time. So we're taking baby steps there. I think over time, as we get more efficient with our own data collection, we can then use technology to look for trends that might not be obvious to a human looking at data, but it might be more obvious to AI or a machine actually kind of parsing through.
Yeah, and it's exciting what folks a lot younger than I am are doing with the technology. So I'll be curious to follow your journey there. And compare notes.
But I think we're not that different from the rest of the market. I think a lot of people are talking about it right now, but the actual utilization is different because I don't believe that people fully appreciate everything that AI and technology can do. And plus, there's a level of trust with it as well.
Yes, that's a great point.
And there's probably some apprehension about, is this going to displace me? And I'm a big believer will there be disruption over time? There will be, but longer term, it should be net beneficial to everybody and allow people to do more business, be more profitable, and as a result, you need the humans there. I don't envision a world where you don't have humans doing the things that humans should be doing. And as a human, I'd much rather do the human stuff as opposed to the things that a machine should be doing.
For sure, right. It's one of those things where you're either going to embrace it or get run over by it, and I guess you'd rather embrace it, right, and get good at it. So that brings me to my next question, which is, for younger folks who might be listening to this session, what's the advice you'd offer them if they aspire to a career around our space?
So this is the advice back in my banking days that I gave folks. You've got to be, number one, you've got to be proactive, right? You've got to make sure that you're in there, that you're asking questions, that you're demonstrating a general and honest interest in the business line. That, let's say you're an intern that you're interning with, or as a first-year analyst, the desk that you're working on, you need to demonstrate that, because that shows to your manager and their manager that you want to be there, that you want to be part of the team, that you want to be value add. That's just, it's incredibly important. And that you've got to ask questions, right? There's no bad questions out there. Right. You have to, and that's a great way to demonstrate that you care about what's actually going on. I think another critical part of this, and comes back to the human part of it, you've got to build your network.
Yes.
This is, when I look around the industry, the folks that I'm talking to now at our member firms are folks that I largely grew up with from like baby analyst stage until now, which is really cool. But if I didn't work on developing those relationships over the past 25 years now, I wouldn't be able to make those calls. I wouldn't be able to make that friendly call to XYZ asset manager and get their viewpoint on something.
Yes.
So I think that is critical, and I don't know if folks appreciate that enough. I was giving advice to someone who was thinking of changing jobs recently at the very junior level, and he's like, well, here are the different things I'm considering, 2 options. I'm like, okay, well, where do you want to be in 5 years' time? Think about that. Think about what that goal is, or 10 years' time. Think about that goal. Think about what each of these paths get you, where they can lead you, and then think about how that allows you to further develop your network, because that network will get you to that 5-year and 10-year mark.
That's such a great point. So finally, I read in your bio, you're an avid youth sports coach. I wonder if you can talk to us about that, the experience, what you've learned from it, what you've imparted to the kids.
Sure thing. And I've been fortunate. I've been able to coach both my son and my daughter. First, my daughter in soccer for 4 years. And then she aged out of that. And then I started coaching my son's football and rugby teams. And rugby practice actually started last night. So this is fresh on the top of my mind. So I think the most important thing to remember when you're coaching children is they get out of it what you put into it. So that means showing up to practice with a positive attitude, being energized when you're there, because the kids really pick up on that. Whether or not you realize it, an adult, the kids are picking up on that. If they see you out there having fun, being energized, but also being focused, it does help drive what they're doing. Like, youth sports is just so important, from developing kind of teamwork skills, collaboration, being able to work through both good times and bad times, and challenges. And I think one of the other key things is, and this is not just for coaching, but also for managing people, it really drives home the fact that not everyone is motivated in the same way.
Yes.
There's some kids that need that attaboy pat on the back, and that's a great job. Others need a lot more direction. You know what? Next time, do this. Think about this. And sometimes you need to give a little bit more criticism, but you have to recognize there are different personalities out there. You don't know what's going on in each of their lives, away from the sports field or away from the office. And everyone is going to be motivated by different things and in different ways. And the key to really succeeding is unlocking all that, and maybe taking a bit of a different approach with different personalities that you have out there.
That's such a great point. Well, I applaud you for doing it. I miss my days of doing it, although I get to spend more time golfing. So I guess give and take in this life. That's all the time we have for today. Thanks, Sean, for making all this time and for your great insights. Please catch us next time on the LevFin Insights Levered Line podcast.
This podcast should not be copied, distributed, or reproduced in whole or in part. Neither LevFin Insights nor its affiliates makes any representation or warranty as to the accuracy or completeness of any information contained in this podcast. LevFin Insights is not providing investment, legal, accounting, or tax advice. LevFin Insights is not providing research or making any recommendations, nor is LevFin Insights offering or soliciting any transaction with respect to the purchase or sale of any security that the listener may hold.